Hello, I'm Keith Hewitt, and this is the pre-AGM financial presentation for the year ended April 23. These are the consolidated results of Cromehurst Golf Club Limited plus the trading company. The trading company results were set up for the CAS reporting. Thank you. Major objectives of this year were putting CAS to bed and securing the finances for careful investment in the club for the future. The agenda is basic headlines, key financial numbers, balance sheet, membership profile, financial approach by the board, and the budget for the year to date. Looking at the headline numbers for 23, we can see that the gross income has increased. This is primarily driven by increases in subscriptions. There's also been an increase in sales for the bar and the kitchen. Cost of sales have increased. Again, this is driven basically by cost of materials. The administration costs have gone up slightly, but overall this is the cover for all other costs. Other operating income has increased. This was primarily the COVID recovery from insurance, although donations have decreased. Overall, operating profit has increased compared to last year. Other interest payable, again, this is about the same, but actually we have paid back some of the funds, but the interest rates have gone up. We have a surplus for the year of 67 against 19,000 last year. Tax has increased. That includes a provision for 30,000, which we hopefully won't be paying. So profit of the year is 26,000. Cash at the year end continues to increase, and the bank debt goes down. So a good performance, really, just gradually improving our financial situation. We now have the year-over-year key financial comparisons. As mentioned, subscriptions, a healthy growth of just under 50,000. Green fees figures virtually holding their own. Happy with that. COVID insurance claim, which is a one-off, which we've just received for this year. The bar and catering contribution, again, fairly consistent, and that's fairly good considering how much the price of beer has gone up. Employee costs, well, we don't get the 10,000 grant which we got last year for COVID. However, we have completely changed the whole management team with new key department heads, so that's some of the cost. Course maintenance, that's basically gone up because of materials, i.e. Sand and chemicals. And the establishment costs, well, we've had some extra professional costs for COVID and accounting, plus general increased inflation. Thank you. This slide is just to identify the significant P&L items which impact this year's accounts. The major income was the insurance claim recovery of 87,000. This was down to an awful lot of hard work from Ian Trumper, and we are very grateful for this. Costs, the irrigation greens, we spent another 45,000, of which 10,000 is capitalised, and then the paths we spent 35,000. The other major cost, which is we've got every year, is the annual rent payable to Whitgift. I've added this extra slide basically to inform people of the deregistration from CAS. I will not read this out. This is just for people who really want to know a little bit more of the detail. However, at the bottom here, I've also identified the fact that we are putting an extra 30,000 provision for tax. We don't expect to pay this, but it's the possibilities, and the chances are, if they come back, it will not be this year. It'll probably be in a year or two's time. This is the balance sheet schedule. This is one of the important schedules in that it shows you the continued improvement of the financial health of the club. The other business assets have increased a bit this year. This is down to the fact that the COVID insurance recovery was received in June of this year, and we've had to accrue that in for last year's accounts. Current assets, stocks increased. I think you can see that, the 30,000 increase in cash held at the bank. Current liabilities have increased, but this is basically down to the subs being paid in advance, which has increased from the prior year. Bank loans, again, that going down again, which is again a good sign. hopefully to be paid off by 2030. And the net current assets, although we are negative, if you exclude the subs, then we would be in a good, healthy position. Membership. Our major concerns in constructing this budget was the cost of living crisis and how that's going to squeeze disposable income for the coming year. We initially budgeted for a 10% reduction in membership. Looking at the numbers, we have actually reduced by 9%, so that was good. And this does not include any new members who have joined since the 1st of May. The other major concern was the new normal. What's going to happen after COVID and people going back to work in the offices? We can see that the intermediate levels have reduced more than everybody else, basically because of these dynamics. Thank you. The main strategy of the club going forward is to remain focused on reinvesting in the business, that is in the clubhouse and in the course, especially the clubhouse over the next year or two, because there's an awful lot of work that needs to be done there. We want to remain cash positive and make a small profit. Day-to-day cash flow, want to be self-sufficient and avoid any overdrafts. Again, looking for the long term to make sure we do the job properly rather than just quick fixes. We will continue to look at the property to see what opportunities we can to achieve rental income to offset the cost of Whitgift. Staff, we're introducing a training development program to improve both for the staff and for the service. We need to look at their own welfare as well as their training and improvements, because we'll all benefit from that. And then we want to leverage the staff and the members' knowledge and expertise to improve the course. So we will be reaching out to people just to help where they have their expertise. Managing our financial performance. One of my key objectives for this year is to maximise the use of our Xero accounting software to automate our processes and produce fully detailed monthly accounts to assist our department heads in managing their costs and cash flow. I have initially budgeted for a profit of 111,000. This is done with the view that around Christmas I will review our financial position and then working with the board to determine which additional projects we can undertake. Thank you. Progress for this year has been quite good so far. Income is ahead of budget. Costs have increased slightly, but in line with budget. We have made a couple of large capital purchases, i.e. the boilers, and we've spent 25k on the paths. The current cash position is strong. We put 300,000 out on a 4-month deposit, which will give us a healthy return. The new staff restructuring, recruitment, new general managers and department heads. The membership, we had a high retention rate, higher than budget, which was a very good sign. Again, we've still got the risks, again, which basically everyone knows about, which is basically around the world and the global and the UK economy. If you have any questions, please either email me directly or send letters through to the office. The outstanding matters we have, the adoption of the accounts at the AGM, the appointment of the accountants, and the registration of the company's house. I'd especially like to thank Ian Collard for his work on getting us out of CAS, Ian Trumper for all his technical expertise, and really Ian, Richel and Anna for all the hard graft which really do all the work here, plus Steve, who's been very supportive. Thank you.